Good evening, everyone. It's Doc here from OnTheMoneyOptions.com. It's Tuesday, February 19th. We're a day late getting to the weekly technicals because yesterday was a holiday and the market was closed. So let's take a look inside the market and see if we can spot any trends that are going on. The first chart I wanted to look at was the SPY daily chart. Wanted to point out two things here. First of all, we've recovered the 200-day moving average, and that's a good sign in terms of bullishness in the market. The second thing I wanted to point out is that a few days ago, maybe 10 days or so ago, we talked about the abandoned baby pattern that you see right here. We've obviously negated that, which makes me feel a lot more comfortable. So starting out with the technicals, looking at the New York Stock Exchange bullish percent indicator, you can see that we're at 56 right now, and we're right under a bearish resistance line. The red line is called the BRL, and if we penetrate that, we'll start a new uptrend with a blue line that's called a bullish support line. These things are important, and they do make a lot of sense when you look at them for 20 years like I've done. This is the New York Stock Exchange advanced decline line. This is the advanced decline issues. As you can see here, issues were up 806 today. We're continuing to make a move up and move back toward the channel. So this still looks bullish for this at this point in time. This chart is the high-low of four asset categories, the SPX, the mid caps, the small caps, and the NASDAQ. And as you can see, they're all above the +5 line, which indicates a lot of bullishness right now. So that's a pretty good sign for the market going forward. This is the SPY Relative Strength Index. At the top, you see that we've penetrated 50. We're currently at 56. I'd very much like to see this get above 60 and stay. As you can see here over on the left side of the chart, that typically when we're in a long-term bull mode, we stay in the 40 to 60 range, but spend a lot of time above 60. So I think it's important that we get back above 60 if we're going to be in a longer-term bull mode. This is the SPX Rate of Change, or using the SPY. The rate of change is still negative, but it is slowly moving back up to the zero line. And again, I'm not going to be comfortable with the intermediate term in this market until I see this back into positive territory. Looking at some of our risk measures, you can see here that the Russell 2000 relative to the SPX moved up today about 0.18%. So again, this indicates that there's more activity in the small caps, and this suggests to us that there's a little bit more appetite for risk in the market. This is the SPX equal weight relative to the SPX. This gives us an idea of the number of stocks that are participating in this move. And as you can see here, we've put in a higher high. We're still moving up. So this still looks like we're moving into a more intermediate bullish mode in the market. This chart's the VIX. The VIX has been quite low recently. I wanted to look at this from the standpoint of overall volatility in the market. The VIX really measures the expectation of volatility, and that right now is pretty low. And we're going to look at that in another mode in the VIX Term Structure here in just a moment. This chart is the equity-only put-call ratio. Again, the PPO in the middle is what I'm looking at. We're in the extreme optimism area. Again, makes me a little nervous. The market likes things to be sort of in the middle all the time, and so we're out on the side here in the extreme optimism, and that always makes me a little bit cautious. This last chart I want to show you is the VIX Term Structure from the CBOE. Their charts are so bad that I put a crude one together here. This line, the yellow line here at the bottom, shows the current VIX Term Structure, and the blue line at the top shows the VIX structure as it was exactly 1 month ago today. So you can see that the expected volatility throughout the range has gone down. And also I find it interesting in the tail end of this, in the current structure, that you see the line has flattened out. So this suggests to me that the earnings season has been pretty good. Most people are not too concerned about major things happening to the market and the market taking off and going down again. So I think right now we're in a fairly stable period of time. Of course, the news can change this at any day and time. So it's always important to understand what's going on internally in the market and always preparing yourself for something unexpected happens. Typically, when it happens, it's too late for you to react to it. So this is Doc from OnTheMoneyOptions.com with our weekly market internals analysis. If you found this information helpful, please click on my like button and feel free to share this with your trading friends. Please subscribe to our channel so you don't miss any of our analysis, tips, and strategies for trading successfully in the stock market. So until next time, trade smart and stay hedged.